Hey everybody, welcome to Trading Capital. It is May 12th here on this Thursday afternoon. I just want to start off with this video and say congratulations on the winners that we've banked. Today we closed our Carvana trade for an 11.77% profit. We covered our HPQ, Hewlett-Packard short, for 10.2%. And then the big winner of the day, we also sold a beautiful day trade, acquired it pre-market this morning and sold it shortly after the open, and we banked 29.5% on MicroStrategy. Good old Micro Sailor making us money. And this comes on the back of basically crypto has been beaten down into support, and it's oversold, tremendously oversold. So it makes sense that as crypto bounces, MicroStrategy was also going to have a major technical bounce. And this was a stock that my fundamental analyst put on my radar yesterday. And this is why you always have multiple eyes on the prize when you're doing analysis, because often you can miss companies and trades where other people notice patterns and levels. And it was a beautiful entry that he gave me around the 155 level. And it turned out to be a wonderful trade. But just taking a look here, our entry was 154.49 on MicroStrategy. You can see as Bitcoin started catching a bid in the morning, we sold pretty much at the near highs. That is incredible. Whenever you see a parabolic move like this on volume, often a huge big retrace and selling will occur once the pattern runs out of momentum and steam. I do think MicroStrategy can go lower, but when you see a move from the lows, and we didn't even catch the lows here. There were some people that caught the lows. That's a 52% rally from the low point on MicroStrategy today. We only got in here, and it dumped off significantly when we got in, but it had this huge, amazing, rip-roaring rally to the upside. So congratulations on that day trade. Nice to start the mornings with a beautiful chunk of profit, especially when it's 29%. Let's take a look at Carvana, another one that was a huge rip today. We were down significantly on this trade. As we opened, we were down 27% on this trade, and I was actually looking to accumulate a little bit more, but this is why we slowly accumulate these beaten down names that are down 90-95% from the high. And I'm not an investor in terms of holding this company long term. There obviously is some potential insolvency issues in, say, 1 to 2 years, but we're just trading these companies, and they're still going to catch a bid when the markets catch a bid. They're still producing revenue. Although they're not the most profitable company, you can still make tons of money just trading in and out of these. And just to put it into perspective, look at the rally. I think Carvana was it got halted like 3 times today just because it was ripping. But look at that rally from the low to the high of 59% bounce. And that's exactly what we were waiting for. Our entry could have probably been a little bit better, but still, nonetheless, we banked a beautiful just over 12% on that trade. Now, I will look to pick up Carvana, kind of do a rinse and repeat if we have this little bearish pattern breakdown. If the spiders catch a bid, Carvana can certainly go higher. The upside that I see Carvana potentially getting to, with obviously the markets catching an underlying bid, is this $58 level. There's a key intraday gap fill that I think will be pretty important to fill. The simple conservative retrace is around this 56 level, so be ready. If we get a small pullback, another pullback in Carvana, we will pick up a little bit more and start accumulating yet again a small position. A couple new trades that we did today: FCX, Freeport-McMoRan. Basically, one of the reasons why we've picked this up is Freeport-McMoRan FCX was one of the leading stocks in 2022, energy and materials. I do think they're obviously going to decline over the medium to longer term. However, if you look at FCX, it's on a 1, 2, 3, 4, 5, 6 time count to the downside with 3 gaps. And if we flip onto an intraday basis here, you are hitting the low range of this parallel channel, which favors a short-term support bounce, as well as a couple key levels here. This is all of your major pivot zones where you intersected here. You can see this was your big power move up here, which made your high in 2021. You came back down to test this area, which you bounced off at a support, and you kind of created this little bit of a right shoulder formation here. But ultimately, this was a huge area of support. This is your green reversal bar, your gap up to your green reversal bar zone. So again, tons of traders and investors waiting in this area. Ultimately, I do think FCX goes lower. There's a key gap fill that goes here. But when you break a key long-term trend line, like this pivot to this pivot and to this pivot, often it will suck new retail money in because it looks like the pattern is breaking down. But more times than not, you get that, especially when the stock is so oversold in the short term, on a time count into support, it usually sucks that new money in to a potential short opportunity right before they rip it back up. They recapture the support. So it has not confirmed below this support level, and just due to the fact that it is so oversold along with the markets, and I think if the markets get that bid, FCX can easily trade back up to this 38, 39 level, potentially up to the 40 level as well. So just a small 1.5% in FCX. It is a blue chip over, I think, 50 billion market cap, so I'm not too worried about the volatility in this name. We did pick it up down on the day, I think around 3 or 4%, so it is a little bit more down on the day, down 5%. But nonetheless, we were buying into some weakness. And look at this volume. Whenever you see a large red block of volume like this, it favors that you're getting into a major oversold category. For instance, we have here 6 red volume candles in a row. Look at this point in time. You had 1, 2, 3, 4, 5, 6, 7, and then you had this massive move from the low. So if we just take a look at how big that move was, that was a 7% move in one day after you had 7 red candles in a row. So we're kind of along the lines of that similar potential move that can occur with the markets catching a bid. And today it does look like the markets, I mean, we're still down in the day on the spiders and the NASDAQ. We've been seeing selling pressure all day, but there's actually a decent bounce that is occurring right now in the spiders. We'll take a look at a firm as well. We sold our firm. Let me just go back into the intraday. So a firm was a huge mover today as well. Again, we were out of the money pretty substantially. I was looking to add again. However, we didn't get the chance to, but that's okay. We still managed to net a profit. But at the low, a firm was at around, let me just see this level, 1366, and it rallied all the way to 1940-ish. That's a 41% move, which put us deep in the money on our trade. I had to take profits after that such a big move occurred. Now it is doing a little bit of a slightly bullish consolidation here. However, one of the reasons why I didn't want to ride this one higher, despite I do think it can go higher, is one simple fact. It reports earnings after the bell. Earnings are a gamble. We don't want to gamble on the stock. If the stock drops, we will look to accumulate again. If the stock pops, we'll potentially look to short it at a key level. However, it's not something we want to try to gamble with and try to foreshadow where the stock is going to go. If you compare past earnings, the last earnings cycle, they missed on earnings and they tanked. Their stock completely collapsed. I mean, if we look at this move, this is all on earnings. One bar down was a 39.5% bar down. And then for 2, 3, 4, 5, 6, 7 days after, 8, 9 days after, there was continued downside selling, obviously probably due to margin calls. The stock fell 60% after earnings. So that's one of the main reasons why we got out. We did not want to lose our gain for potential, loss on the trade or putting us deep out of the money. But if the stock pops, oh well, we'll just move on and reassess. It could certainly pop another 20-25% and we could have missed out on that profit. But I would rather take the profit that's in hand versus the profit that is not in hand and is a lot more riskier heading into earnings. So we'll just have to watch this after the bell. It will be a potential interesting one that we can trade if it has a sharp move down or a sharp move up. If we look at the financials, today we picked up FAS, which is a ×3 of the financials. One of the reasons why I picked up FAS and I'm bullish on financials is ultimately with rates going down in the short term, it should support the thesis that financials are weaker, because financials are typically stronger as rates rise. But we've seen the exact opposite happening. As rates were rising, financials were getting killed. So now that rates are slowing, as the economy, the stock market gets a little bit of a bounce, the financials will bounce with the overall indexes, S&P. And one of the main reasons why we added to the FAS, and I should be analyzing the XLF chart, but it's very, very similar to this chart. There was a key technical gap fill here, which we filled perfectly. And you're trading at the low range of this channel, again, on a 1, 2, 3, 4, 5, 6 days of downside in a row. Your mean reversion is likely to happen back to the 50-day moving average, which should coincide with this bottom support here around 100, 102 area. So I think we can net a beautiful profit on FAS as the markets continue to bounce. We are in the money on that trade. You can see that we're having a late day spider push here, power hour. And honestly, I think we could easily see anything in the range of 25 to 40% on this trade should the markets hold up for 1 to 2 weeks. I won't be in this trade for that long since it is a ×3 levered ETF, but nonetheless, with financials being completely oversold, the market's oversold, that bounce is certainly favorable. Again, it's a very small position that we have taken, but needless to say, it will be one that is likely to profit for us. Let's take a look at TWOU, another one that we picked up today. One of the reasons I picked up TWOU today, if we look, we have this incredible trend line going back to 2016 pivot, your 2019 pivot, and then your recent pivot in February. This stock had a massive run up, tried filling the gap, fell, broke down below the 50-day moving average again, and now look, you've retested this pivot low, made a new low on the charts, and also hit that trend line for a 4th time alongside with this yellow support line. So TWOU is now trading at the lows of the charts. Again, a favorable bounce is to occur for this stock since it is so beaten down. The fact that this stock was trading at 59.90 in February of 2021, and that wasn't even the high. The high was basically in 2018, trading at around near 100, and now it's at 8. It's done a full round trip. Again, if you look at this sell side action, it's just been beaten down, beaten down, beaten down, beaten down. And again, since the markets are oversold, this is a likely bounce candidate. We are slightly in the money already. We got in at 860. We're up 9 cents on the trade, so it's good to see that already. Where I will consider taking profits is potentially up at the 50-day moving average, depending on how the market fundamentals look, mainly the S&P 500 at that given time. I will reassess on an ongoing basis. I'm just trying to see if there's anything else that we need to be aware of. Oh yeah, we did pick up a little bit of Apple today. Let's just take a look at Apple. Apple, there we go. So Apple's catching a nice bid here in the after hours. We are slightly down on the trade. However, if you look at Apple now, we bought in at 143.38, so we're about $1 off. Apple broke key support, you can see here, and it's had some harsh moves to the downside. I do believe Apple will likely come and retest this orange trend line. Whenever you break a key level of support, which is this orange trend line here, connecting this pivot to this pivot to this pivot, you hadn't broken this level for over a year. So whenever you break a key long-term level, it's likely that you get that retest back to the breakdown area, and this would be the breakdown area. So, that would be a small, simple, 8% for us on the trade. If we play it conservatively and take profits at that level, it'll be a nice 8% in our pocket. It could potentially go a little bit higher than that based off of how the markets are, but that being said, we're not looking to stick around in any of our trades for a long period of time. We're looking to quickly take our profits over, a 1 to 4 week time frame, or maybe a 1 to 6 week time frame, just depending on what company it is. So that being said, we will jump into another analysis of the indices on a later video. But again, congratulations on all the winners that we banked today. It's amazing to see the power of just inching in and slowly accumulating positions that are beaten down. I mean, take it for Carvana and Affirm. Most people would have never thought that it could have a 40-50% bounce. But that's the thing about these bear market bounces and trading these companies from the lows, is that it doesn't take much for them to bounce 50%, and they're still down 90-95% from the highs. So again, well done, congratulations, and let's